I don't want to answer your question about the recession.
Okay, good morning everyone. Thanks for being here. Today we're dealing with the speculative portfolio, or the degen portfolio as I call it. I am going to put a fair bit of effort into this, maybe in vain to some degree, in that no one should really care about this portfolio that much. It is speculative. It's not investment advice. It's not something you should do. You're going to hear me say this over and over again with this one in particular. But by the same token, I have chosen to not just buy everything on the open, because the poor medium risk portfolio really took it in the chin on a couple fronts there by just buying indiscriminately. So I'm going to be a little bit more patient with this one and do a little bit more work, unfortunately, which means this video is going to be fairly long by the time we get through all the different pieces. But essentially what we're going to be doing is setting the average prices, making decisions throughout the day, buying as per the rules that were established last night, which is sort of, buy if not up more than 5%. And then similarly, some of them say wait for a buying opportunity. Well, if the market tanks enough today, then we're gonna be buying some things. So a lot to do here for something that, again, nobody should really care about that much. I think this will be a video more that maybe people will look back on. Let's say this portfolio is up 500% eventually. Let's just say, after a fair bit of trading over time or whatever it may be. People at that point might say, well, where did this start, right? Like, show me that you bought X, Y, or Z at that price. Well, that's kind of what this is about. It's sort of establishing the portfolio, showing the initial trades, showing that we didn't, know that something was going to go up 50% and, backdated our trade or something. So it's a little bit administrative in nature, and it's going to take a little while to get through all this, but if you're interested, great. If not, no worries either. There's other videos here, and there's going to be a lot of shorter videos that are maybe more appropriate. But yeah, here we go. Let's get into it. So we need to get our average prices for the speculative degenerate portfolio this morning. We're going to go through and do that now. If you recall last night, I had mentioned that we won't be buying if something gaps up more than 5%. Well, I've just gone through and very roughly looked at some things to see sort of what might have gapped up that much. Markforged was up 17% on the open, so we're not buying that. So I'm going to move this to wait for pullback, because we don't want to pay plus 17%. Would have been nice if we bought yesterday or Friday, I suppose. Hyliion was up over 5%, but we were waiting for a pullback on that anyway. The other one was EOSE, was opening high over 5%. I don't know where it actually opened actually. Administratively, Overstock is now beyond. Its symbol just changed. Not showing up on Yahoo, where I'm using for a lot of this yet, but it will, I'm sure, change shortly. So yeah, let's go through and get our cost bases. I guess what we should probably prioritize, the things that are buy if less than 5%, we don't have a choice on. It's just going to be whatever the open was, provided it's not greater than 5%. The waiting for pullback ones, though, we could take a quick look at it, and if anything's down a decent amount, we could grab that. Maybe I'll spare you the pain, and maybe I'll do it on my own here quickly, of going through each of these. But yeah, the opens are going to be just whatever the opens were, so that's straightforward. Maybe, and I'll do that on my own again, because that's just administrative, going through and finding out what the open was and blah blah blah. So that's fine. Yeah, so give me a minute. I'll just update all these. I'll check for the waiting for pullbacks to see if there's anything interesting. Enovix was a buy half. So the other half, just a moment ago, it was 1014. Hopefully it still is. Enovix, 1 sec, that's Enphase. Wish I bought Enphase there. And you can see that that's sort of the trend you're seeing, is that pullback, and now it may be coming off the bottom. So I just marked it a minute ago with a screenshot at 1014, so we'll do that. As you can see, it was 1012 was the low, so that was actually pretty close. doesn't mean it isn't gonna continue lower, but anyway, it was sort of a good enough for me. So we got 1014. The first half, however, we did buy at the open as per the instructions. Therefore, we paid. What did we pay? Where's the open? Why am I not seeing it? Oh, there it is. 1066. We paid 1066. Nice, great. Okay. But it was like this for everything. So everything kind of gapped up a little bit higher typically, and then it's a lot of it's sold off. So another less than optimal start. But the good news is this time at least I said, hey, you know what? Let's wait for a pullback on a bunch of stuff. So we'll get some better prices for some of this stuff. I haven't looked, but I bet these biotechs are actually down. Let's just check a couple of them. We might want to grab one of them if they're down enough. We'll see. 120, that's not exciting. Okay. Recursion, 2, not exciting. Denali, not particularly exciting. I'd like to see them down like 5%. Okay, yeah. No, so we'll keep waiting on those. That's fine. Caribou, I didn't check that one. Caribou. Oh, up 11. Lovely. So we're not buying that one anytime soon, unfortunately. So that's, look at that. 347 to 470. Yikes. I mean, good if you own it. I think we own it in the medium risk portfolio. Hopefully, we probably own it from up here, don't we? Because we would have bought on the open. Should we check? Let's just check. I'm curious. Medium risk, Denali, where are you? Denali, or not Denali, so Caribou. We own it from average cost 365. Oh, look at that. Look at that. That's all right. We own it from 365. That's cool. So that was back here on the open, I guess, of something. Or was, oh, we took a screenshot. That's what we did. We took a screenshot live, probably after it had gone up a bit in the day. So anyway, that's great. Up 12%. Nice for the medium risk portfolio. But we're not buying it for the degenerate portfolio here. Not yet, anyway. So back to this. Okay. C limited, maybe it's down a bunch. I don't know. That'd be cool. Nope, it's not. Palantir, let's check Palantir. Probably not down enough to get excited over. No. Yeah, it had a really big run up over the last few days here. But we might get a pullback. If we see like 16, that'd be cool. I'd buy that, I guess. Okay. Good. So unfortunately, kind of like the medium portfolio, things gapped up. We paid on we bought on the open, and we'll suffer for a little while on that, and we'll probably have some red, but that's okay. Just administratively, I don't want to get too nitpicky on all this. So anyway, I'll run through. I'll grab the average cost from the opens, provided they're not less than 5% gap up. And then the only thing we really did there just now was buy the other half of Enovix. Oh, the options. We can do the Enphase calls. Oh no, they're on the open though. Shoot. We have to just buy what was on the open. So actually that's going to be a bit tricky. You know what? We're going to have to do it just as it is right now, because I'm not going to be able to get that data really. So Enphase options. What are we buying there? Did it say? We're buying just this calls. Okay, so we actually, sorry, we need to make decisions on Enphase calls and Tesla calls. So this isn't entirely accurate. I can't really do that. So calls January 26th is what I'd tentatively put, but let's just do this together right now. Sorry for a little bit of inconsistency on this one, because we need to sort of get proper prices here. So November 10th. Now we want let's do January 25 for this one. We don't need to go up quite as far as we did in the other portfolio. And what strike do we want? This is a degenerate portfolio, so let's get a little more aggressive. Last time we went 75. Let's do, well, let's pick something with some open interest. So this is open interest. This just means that there's some volume in the contract. I'd like to pick that one. That'd be nice, but let's just pick this one. There's been no change by the looks of it, although it might just be that it hasn't updated. Let's just tentatively take the ask of 12.55. Oh no, it has updated, because the last price was 13.05 and it's showing lower numbers now. So it's just bid ask. There's been no trade today. So we'll put in an order hypothetically between those two prices. I mean, what we would do in real life, and we probably get filled between the two. We'll take the 12.2055 just for conservatism to sort of, you know, show that we could have actually executed the ask. So that's well, that's not Tesla, but that's Enphase, isn't it? Enphase. And what strike was that again? That was the 115s and January 25s. So January 25, 115s. Okay. So that's Tesla again. We don't know what we're doing on Tesla. So let's put that up here. January, let's put call in there. C. Okay. And then
I didn't get that. Could you try again?
Oh, hi Siri. Nice of you to show up. Okay. So Tesla, let's do Tesla really quickly. We'll just kind of do it wherever it is right now. I don't even know if Tesla's up or down. It's up a little. Okay. Options. And we will go out to about 25 as well. September 25. What's got some volume here? Anything? Way out here at the, these are calls, right? Yeah, 195. No, we want to be out of the money. So 250 is probably fine. That's got some volume. The 240s has some volume. And the 235s. Or we could go way out here to 280. That's degenerate. Let's do that. 280, there's lots of open interest there. Let's do 50-10. So mark that at so 280s and what did I say? September 25. September 25. Let's plug that in. Calls. Let's put C. September 2025. The 280s. And the price was what? 50-10. 50-10. All right. Okay, so we marked 2 call options. Enovix at 1014 for half, but we're also buying at 1066 if I recall. So we've got to work out the average cost on that, which is annoying, but I will do it because I am a slave to this stuff right now. So you can see all the 2s over here. These are the book values. It's the average cost times the units plus the $2 transaction expense from IB. I'm sort of using an IB, Interactive Brokers, as my proxy for trading cost because that's where I do most of my trading is IB, and they're just dirt cheap for their commissions. So everything's $2 until we get some costs in here and some units. And the units all work out. They're not going to be exactly 5% because I ran into this issue initially where I just sort of divided by, you know, did the math based on the round percentage, but then what I got is a bunch of fractional units, of course, which is fine hypothetically, but for realism, we really need whole units. So I've got to go through and get sort of the closest whole unit to each of these, or darn, yeah, I'll aim for the closest whole unit to each of these, which is also a pain, but happy to do it. So, all right, TLT, let's just check that, I'm curious. So that's going to be, or TLH actually, I'm sorry, it's TLH we're buying, not TLT. The 10 to 20 year bonds, we're buying on the open, so we're already down, which is lovely. We're buying at 97.52 it looks like, yeah, and it's down 0.5% or so. So anyway, I'll go through, I'll update all those now. We'll come back in just a minute with all the right average costs, and we'll go from there. All right.
Yeah, I think the Fed's record on these things is wonderful. It's almost guaranteed to be wrong. They have never called a recession, and particularly not the ones following the great bubbles. They prided themselves in stimulating the bubbles. They took credit for the beneficial effect of higher asset prices on the economy. They have never claimed credit for the deflationary effect of asset prices breaking, and they always do.
Just a quick update as I go through here. SunPower is down enough that we can buy that. I'm happy with that. So we'll take 427.50 as our average cost on that one. SunPower. This is a waiting for pullback, and you know, good enough pullback. We'll take it. Moderna I thought is okay as well. RNA, that was down. Oh, is that it? Yeah, that's fine. Yeah. So we'll take that as well, 74, 75, that's fine. The more of this I can do right now, the better. Moderna, there it is. So we're no longer waiting for pullback. I guess I can just delete that, and I'll delete that on SunPower as well. Stem will take that. That's the number. Down 6.5%. It's good enough for me. So we'll plug that one in there as well. Currently it's a sea of red because we bought on the open and the market's been selling off. So, you know, any of these like buy on the open if less than 5% are ugly. So it's going to be a big red number by the time we get to the bottom, but that's fine. That's the way she goes. And yeah, the waiting for pullback has been helpful this time, obviously. Again, adding a little bit more realism because I don't generally start a portfolio this way. So as I'd marked previously was up, you know, above 5% prior, so we wouldn't have bought that. So I'm going to mark it just for a second here as waiting for pullback because it was up too much. It's actually down, yeah, down a bit. I would do half here and I would do half later, but I'm also just kind of lazy in that it's administratively kind of a pain in the butt. So I'm actually just going to take this number. It's not exactly what I would do, but we'll just be happy with it. And you know, I would imagine you can get a better price if you wait here, but interjecting here. And a few hours later, down 9%. I definitely should have waited, but I was lazy and I didn't. So carry on, but with the other half, I should say. Whoops, but we will we'll take that for now. So there's the actual number. Unity at the current price here, and Unity. So I actually accidentally put these numbers in, so I'm actually gonna because these are all wait for pullback. So that one's gonna be that. Sentinel, we could probably buy here too. How much is that down? 3? That's fine. Yeah, we'll take it. Down 3, all right. So that number, and CrowdStrike, probably not down enough in that I'm looking for a more meaningful pullback in that and Trade Desk because they've been on a quite a long run here. Trade Desk less so, but you know what, we can just buy Trade Desk. Let's again, just for simplicity and not overcomplicating my life. XPV, XPV, up. No, thank you. Okay, and I'll just quickly give you a sample of how I'm doing these units. Is calculated what the market value ideally would be, and divided by the average price that we purchased at, and then we get a number that is not going to be round. It's going to be a fractional share, and then I've just rounded. I put round on every one of these, so it's just going to round up or down automatically to a whole number. So that's what I've done with everything. Just makes it quick and easy. Yeah, Virgin Galactic Space is down 172. It's down 7%. So we'll take that number, take it over to here, and put that one in. We're no longer waiting for a pullback on that. Rocket Lab maybe as well. Let's see. 390. Yeah, it's fine. Good enough. We'll take it. Okay, Rocket Lab. Put that one in there as well. JFrog. Is that down much? I don't know. No. Okay. All right, well, we're filling this out pretty good. We'll leave some gaps, and, you know, that's fine. And, yeah, oh, another administrative note here. Beyond not only changed its symbol, it changed, as you can see, it's not working. It actually changed its exchange as well. It went to the New York Stock Exchange. So then it updates properly after that. There we go. And yeah, I still haven't done the P&Ls yet. They're going to be ugly day one, but you know what? That adds some realism. Again, I like it. You know, when do you really realistically buy the bottom on everything? Not very often. So yeah, we'll get to see some bleeding on this portfolio, I would imagine, which is fine. Especially since we're not going to be fully invested. We won't be up to the 100% right away. Well, sorry, we will be because we'll have the 30% TLH, but this is such a low volatility item that it's not gonna impact our equity, which at the end of the day is what we care about. You know, if we start at 400K as we are, and we draw down to you know, if TLH pulls us down by $3 grand or $5 grand, it's not that meaningful. But if we were 140% on equities and we had a 5% pullback in the market, that's going to hurt. So, all right, I will continue with my work here. Envelope, we're not, this isn't perfect just yet, but and we obviously still have gaps where we haven't bought things, and the weights are a little bit different. One administrative note: had to round the call options up or down accordingly. Tesla, unfortunately, I had to round up to 1. It's kind of silly. I mean, we were aiming for about 3,000, and we have to go with 5,000 because you can't buy less than 1 contract. So that's fine though. I don't care either way. So, all right. Yeah. So here's the damage so far. This is the levered. Actually, this should be levered or unlevered amount because technically it's unlevered right now. Oh no, it's not. No, it's probably levered. Yeah, it is. I think that's right. In that the 120 is boosting us above. Yeah, it is. So otherwise, just on the equities alone, we'd be unlevered, but with the fixed income in the mix, whoops, sorry, we are actually levered. So it is the levered amount. Levered, and here's our starting value, more or less, our book value, minus the, or here's our market value, and so we're down 15, but we're down 15 on 400 because we don't actually have 453. We only have 400, so we're at 384 right off the bat. So again, this shows how important it's going to be to manage risk on this portfolio accordingly, and yeah, it'll be interesting. So it's also why I'm saying do not do this. This is just for fun, this one, but it will be interesting. Okay, so this is cleaned up fairly well. Here's the full list of what happened. Waiting for pullback if less than 5%. So the greens, we went ahead on all the greens. I just marked, like this one was over 5%, therefore we didn't buy right away, which allowed the opportunity to buy on a pullback, which was sort of the intent. Don't chase this thing, and then yeah, I guess in this case it actually ended down. It traded down, although it gapped up. So yeah, a bit of luck there, I guess, based on the rules we set beforehand, but allowed us to buy a bit lower. I think there may have been one more that happened on. There's certainly, yeah, this was up 15% or something. We were waiting for a pullback anyway, or sorry, Mark Forge was up 15%, but we're waiting for a pullback anyway. Yeah, okay, and then Trepanion, I think, is down about 8%, so it's going the wrong way for us to take an active short there. Adding this all up, we're 84% exposed off the bat, which is good because I don't want to mess around too much and take weeks to build up this position. And then yeah, treasuries we went ahead with the full 30%, so we're 115% exposed. But not 100% exposed from the equity side yet. A lot of red on the P&L because market gapped up and then sold off all day. So we've got some that are down 5% on the day because they're just that ugly. And yeah, still down 15%. They'll just explain this a little bit more. This is our levered amount, the amount of money we're using, so 53,000 of additional cash that we don't have. So we will have to apply an interest rate to that 50,000, which I will do. This is our actual market value, invested that, already at that, and so therefore, because we only have 400,000 of capital, we're at 384, which is a 3.83% loss on the day thus far. Which again is fine, right? You gotta be comfortable with a bit of red. If you're not comfortable with red, this is not the game for you. This, however, is not the game for anyone, as we've said, because it is a speculative degen portfolio that no one should actually be doing, but it's just for fun. So that is looking good. We're more or less set up here. I will continue to tidy this up, and then it'll be interesting to see where we end the day today. We had a bit of an error here that I just noticed. So we have at least 2 positions, maybe 3, that are foreign. They're not in USDs. So this one, Whitehaven coal, yes, coal, gotta love coal. This is a degenerate portfolio, remember, right? So we're doing awful things over here. We are coal buyers for a whopping 3.5% of the portfolio. So the problem was and is that these numbers are Australian. One sec, let's back this up. So this is what we're targeting. We're targeting 6,500 US as a market value, or a book value actually. Or sorry, that should have been book value, yeah. So book value we're targeting 6,600 or so, which means I am actually in the wrong column here. So we'll just redo this math live. Should be column M. So we're aiming for that book value right there, which is 10,255 Australian dollars that we have to spend, if you will. Our average cost on the open was $7.15, so we are purchasing 1,434 shares. I'm going to round down here, 1,434, so we'll put it right here, 1,434. Now, it switches my numbers to Australian dollar numbers, of course, which makes this look too big because my summation here is going to be in US dollars. It's going to think this is US dollars. So what I have to do is I just have to convert these every time with a formula. Actually, I can just do it here. Back to USDs. And so for now, the exchange rate was 0.65, or is currently 0.65. Probably just keep it at that for now. And then, you know, if I'm making any significant changes, I'll, you know, obviously I'm doing a trade, I'll make sure the exchange rate is right for the trade, the exiting trade. But probably it's fine to just keep it static for now, unless something significant happens, or maybe I'll check it every now and then and update it. It's just kind of a pain, but anyway, so there we are back at our intended book value in USDs, but our numbers are going to be in these numbers, well, it's units, but these numbers are going to be in Australian dollars all the time because it's a Google Finance live quote that just brings in the live price in Aussie dollars. So I can get rid of this now. Those are my calculations. And as you can see, just a sea of red. What that does change, though, is we're actually not quite as offside as we'd originally thought there, because that was showing like a $6,000, $7,000 loss, just because of the exchange rate being off. In fact, the other one I haven't dealt with yet, which I will deal with, is Surge for sure. Where did that one go? Surge is in Canadian dollars. Surge Energy somewhere here. Help me spot it here. Where is it? There it is. Search. Okay. So that one is going to need to, it's going to be wrong. Whatever it's saying is wrong. But it's currently only a $65 loss, so it's not really consequential at the moment. But I will need to fix that and do the same calculation, which I will do offline. You don't need to see me do that second one. But yeah, we're down about 2%, not what the 15,000 or so it was showing before. Now, I'll explain this really quickly. Well, actually back here, first of all, we're 84% invested. Well, actually, our equity weight is 84% of an intended 110 on the equity side. So we're under 100%. We're not fully invested, though we're adding the fixed income at 30%. So we are levered overall. So our levered portfolio value is 446. $46,000 of borrowed money, essentially. So we'll have to pay interest on that. So I'll have to calculate that, include that in the breakdown. Day one, it doesn't matter, but after a month, it'll matter. And then there's our current value, so down 8,000, which is better. So on the levered amount, if that's the amount of money we had, we'd be down 181. But we only have 400,000, and we're down $8,000 on it. So we're down at 391, down 2.2%, 2.02%. So that's how that all falls out and stacks up. We have one green here, which is fantastic. Look at that. It's literally one green. That's funny. So yeah, you know, good start, right? We have some things that don't look like we're going to buy them. Like marked forward is still up 15%. We were waiting for a pullback in the first place. So we have some weightings here that, you know, may not get allocated. I don't know about these two. These are all, you know, up a lot and not pulling back enough. So what I'm thinking I might do is just, in the name of getting this portfolio invested here, do some slight real-time adjustments. So SunPower is down a good chunk. We already bought the full amount we intended to. which was 1%. But I'm going to bump this up to 2% as the degen we are today here on this. So 2%, I'm just going to mark this that I need to deal with this. But so 2%, and then the current price that we're going to be adding at, we're just going to double it, so it's going to be a really easy calculation, is for 1750. So I'm going to grab that. So that's going to be the second part of our average cost, and our average cost is currently 428. So let's just do that right now. So it's that plus this divided by 2, or I could do average, I guess, but anyway. So our average cost in this guy is going to be 423 now with a 2% position. So now we've bumped up. Oh, that was our planned. Okay, so that's fine. I just need to double my units here. Well, actually, no, I don't. Sorry, that's little. I need to use the same amount of money. I should be doing a blotter for this one, I guess. Maybe I'll do a blotter for it. Okay, and then the other one I'm going to do is a degen position for sure, one little one. It's a micro cap, which I'll speak about some of these later. I think this is interesting. It's like a potential 10 or 20x, or maybe just a 0. Who knows? So Duro will take the current last price at 11:16 a.m. Eastern time, that is. So 96 cents. Where is it? Average price column is here. 96 cents. A Duro. And we'll do, pick a number. We'll do 1%. And this will then be a calculated number very close to 1%, depending on how many units we buy. Actually, be very close to 1% because it's so cheap that you'll get just almost the exact number of units that you want or need. So that'll bump us up with those two purchases to 86% invested once I do those calculations. But I just wanted to show those live, as I always do when we do a trade. We're going to take the US version to save ourselves the pain of having to do the FX conversion and maintain that and stuff. So we'll take 71.03 as our average cost here, not the 96 cents Canadian. So I will plop that in, and I will update this accordingly. I did the calc there quickly on the other one, but we'll do it on the US at 71.03. Or grab a price from something. So yeah, SunPower, I like that. SunPower is down a whole pile. That's great. Good. May go lower, 715 million. Okay, let's see statistics. Yeah, it's darn cheap, isn't it? Price to sales is 0.44. It does have debt though, so I think that's probably why it's being penalized more than other things. A lot of the things we hold in all the portfolios are net cash. This actually has more debt than it has cash. And in this environment, you get penalized for that, especially as a small cap. If you had to refinance all that debt right now, you'd be paying through the nose. It's it's not a good position to be in. So a really ugly looking chart there, but 5 days, it's actually not so bad. It's just a pullback. It's, buying the dip, maybe. We'll see. Okay, so that's that update. So SunPower, we went up to a targeted 2%. It's down a little bit because our first purchase, we purchased a little bit higher, I think at -6%, and it's -8% now, so that's why the weight is a little bit lower. And so we have those two prices, 27.5 was the first one, and then 17.5 was the second one. And then I just did two $4,000 lumps, which means the first purchase was 936 shares, and since the price had decreased and we could buy more shares with the same amount of money, we bought 958 the second time. So we end up with 1,894 shares, round number, or well, an integer I should say. Yeah, an average price of 423. So down $1 or $2 there, but up the position based on the pullback that continues on that one. So now up to 86.5%. So that's good. I think I'll just hold there for now. I'm not, there's no rush to fill the whole thing right up. Even though it's fun and we're getting burned, so it's great. Okay, cash will be a negative number as well because we're borrowing money. yeah, that's everything. Here I've cleaned this all up. So we have 3 columns here, just so you understand what we're doing. This was the planned weight, and this was all based on the 400K we had, hence why it added up to, you know, something greater than 110. It's 112 now because I haven't reduced stuff accordingly, which actually I will do right now. What did I say? I'd remove marked forge since it's just getting away on us. And maybe I will reduce this one a bit. What do I need to reduce it by? 1.1, yeah, okay. So we'll take this down to 190, or 1.9%, I should say. There we go. There we go. So we're back to 110. So the 86 then is how much of this we have executed. So there's quite a bit further to go to get to 110. And of course 100% being 100%, we're still not there yet. But what this is, 74 is obviously a different number. What this is just doing is saying, okay, but we're actually using not 400,000, we're using 474 based on our leverage, right? So what is the value, the current value, in fact, which, you know, most of these haven't changed that materially, but what's the current value versus the market value of the levered, right? Like this would be your portfolio value. If you're looking at your account, this is, well, it would show this would be the market value of your securities, right, that you're holding. So what is the weight of any individual security divided by the market value of your holdings? So what weight do they hold? It should add up to 100%, right? We're looking at this kind of from a levered point of view, but from you have a portfolio of things, what weight do each of these make up within the portfolio? Well, you know, so you can see it's a little bit lower, right? MicroStrategy is in fact 4.28% of the total 100% of the total pie that we're working with, dollar-wise. So anyway, that column will actually be the most relevant going forward. This is really just to show sort of the initial, you know, positioning and whatnot. We probably can get rid of this later. But we do obviously want to keep track of our leverage, but we'll also see that leverage in here, right? We have our actual capital versus our unlevered or levered amount. So yeah, hopefully that wasn't too complicated, but basically just trying to, you know, get a number that rounds up to 100 or adds up to 100, because it absolutely should, of course. So yeah, so just finishing tidying this all up so the numbers actually make sense. This is getting worse. Good. Anyway, fun times. Filling this thing up. I'm gonna add some SolarEdge. It's down a decent amount. I wish I noticed it earlier. It was down. Yeah, SolarEdge. That's weird. One day. Yeah. It was down down to 68 earlier. We'll add it here though at 70.56. Grab that number, and we'll just do a 1% position. Nothing too crazy. I'll drop it in here where there's some other solar stuff. SolarEdge is a lot cheaper than Enphase, but you know, for a reason. In fact, its recent numbers were pretty bad, so yeah, not confidence inspiring per se, but oops, oh shoot, what was my number? 56, wasn't it? I think it was 70.50 something. I can double check that. Shoot. SolarEdge and average cost. I'm looking for this column here. I think it was like 52 or something. I'll check it. Yeah, so you know, not my favorite, but it's down so much lately that it's just getting pretty tempting, right? It's you know, February of this year it was 326 and we're down to $70. It's trading down at, you know, 1x sales, especially when you consider enterprise value. Like it's cheap for the level of growth that they're producing. And they have a huge macro tailwind. That's the reason why I like solar so much. So it's just a matter of picking things that are going to be or have the staying power and be good operators. And yeah, this is just that much cheaper. I mean, let's just look at it really quickly on a you know, price to sales basis. We'll use enterprise value. So this is more or less 1 time sales, whereas Enphase, which I like better, but it's yeah, basically 4 times sales. So it's 4-fold more expensive, Enphase, you know, per dollar of revenue. So yeah, it's tempting, you know, because it's so cheap, but it's not as good of an operator, and you know, it probably won't grow as fast, and it'll probably struggle more in times like these. But anyway, I'll add that in. That'll bring us up to 87%, and yeah, that's good. Earlier, just saying, you know, if it pulled back enough, we'd take a position. It was down 2%. It's down 4 now. It's, I don't know. I mean, I'm just inclined to add it here. You know, it'd be nice lower, but we'll add a bit. So 1808, and I'll take that over here and add it to Palantir. Average cost is going to be that, and let's just see what position size. Let's just do 1% for now, though, because I don't love the price. Again, we kind of have the optionality here because it was set for waiting for pullback, so we don't have to do the 1.5. So we'll just do 1%. We've also spent some money on some other things here as well. So 1%, that price, and I'll just I'll update that, the rest of it accordingly. Also going to add the two of these biotechs. Intelia is down 5.23%, so we'll grab that right there. That's good enough for me for now. Big picture, it is, you know, pretty decimated. Another one of these ones with a ton of cash, and some good prospects, I think. I mean, obviously on a price to sales basis, absurdly expensive, but it's not why we're buying it, at least not right now. So we won't do the full 1.9. I don't love the price, so we'll just do 1%. So 1% at the price I just grabbed, 27.25. And then the other one is Recursion. Is down 5 as well. This one's pretty much making new lows almost. It's not close to it. So we'll grab that one. Hopefully this is a relatively small position. I'm not thrilled, but Recursion's meant to be, yeah, 0.7. That's good. So we'll do 0.7 as specified, and we'll do it at the price we just grabbed. I will update those as well. There we go, 0.7. So 2 more. Okay, I've been watching this fall away all day. Let's grab some of it here at down 9.64%. Nice. Earnings are actually today after the bell. This is a degenerate portfolio, so let's be degens here, I guess, and gamble on earnings. Frankly, there's not a lot that they could say that would be problematic at this point. You know, we know they've been raising cash. I won't get into all the details, but basically their cash position is going to be a lot stronger. I just don't see earnings having the potential to do much damage at this point. If you back out here, you know, this thing it was a $5 stock back in June. It was a almost $4 stock in September. In fact, after hours, I think it was like a $5 stock almost, if I recall, or at least $4.50. So yeah, I don't see the risk being that high at this point. It's you know, it's dwindled away here to not much of a market cap. So we'll add it at the price I just grabbed there a minute ago, 25. Okay. Some of you are probably like, gee, I can finally see, thanks. So we're not looking for the medium risk portfolio, we're looking for the speculative one, since that's what we're dealing with today. This was EOS. We bought 6 already. let's add at least 2. Let's be reckless. 2 more. So I will have to do some math on this one because we've got some odd percentages. So I'll actually do a trade blotter for this one. You know what, if I'm going to go to the effort of doing it, let's make it 3%. And I'll do, yeah, proper trade blotter for it. But in the meantime, I'll mark it as now, you know, planned 9% and 189, that plus the price I just grabbed, which is 178. So we're going to do the 6% we already did right here, and then we're going to do 3 more right here. And that will give us an average price of some sort, and we'll figure that out. Okay. So this will be the last segment of this exceedingly long video today. I apologize for being so long. I know it's tedious and a bit painful. The intent is maybe not, you know, for people to watch this thoroughly day one, but it might be something to watch later on, you know, if this portfolio does well and you kind of run a review where it started and whatnot, and just how these trades came about. So yeah, so end of day here, just checking in on where things landed. It may not be entirely perfect just yet. I mean, we have all the data now in this exact video showing where we bought everything. So I may just have to double check some stuff, but I think we're pretty good. I mean, we've got average costs for everything worked out based on, you know, what we talked about in this video, and then the damage here for the day. So you know, if you're sort of running an unlevered portfolio, we would have been down 2.24% overall. With the leverage over our actual capital, we're down 2.8% on the day. You know, I don't know, you know, not an insignificant amount, obviously, but it is levered, and you know, we're running now 122, so it's getting up there. And it was a pretty negative day in the markets, so not to be, yeah, unexpected. You know, as I've said many times, though, this will need to be risk managed to some degree if the market starts to get really ugly, because, you know, we don't want it to hemorrhage 11 grand a day for a month. You know, it's not gonna work very well. So for now, no problem. I'm happy to wait this out. I think this is probably just a pullback, and I think we're in the process of rounding a bottom here. I just think that there's enough negative news coming down the pipe with regard to the economy that the Fed is just going to be forced to become a little bit more dovish, and we're going to get a little bit of a pivot out of that. You know, markets are already starting to see that, it seems, and that would be very positive, I think, for a lot of these interest rate sensitive stocks. A lot of these things are down as much as they are, not because they're not growing, but because, you know, the NPV, for example, of a solar project just doesn't look nearly as good with interest rates where they are currently. So yeah, you know, these are inherently interest rate sensitive, many of them, and their stocks have been treated accordingly. So I think it's time for a reprieve. I think they're due to get a bit of reprieve. I don't think we have a lot of bankruptcy risk here. I mean, other than the, you know, clearly degenerate type positions that I've mentioned, or the occasional one that actually does have a decent amount of debt, but they're few and far between. Most of these are down as much as they are because of multiple contraction, frankly, not business issues typically. So yeah, okay, I'm gonna wrap it up here because this is getting absurdly long, and hopefully the updates going forward will be more brief. So okay, until next time, thanks for tuning in.
Decline of interest rates by 20 percentage points over that period was a dominant factor in the financial world. I think it was the most important single event in the financial world in the last 50 years.